We are live.
All right, everybody. This is episode 34 of the Beef and Bitcoin podcast with your host, Brett and CH. Today's show, interesting week so far. It's Thursday in the middle of August, and global macro is shaping up. We have Bitcoin just dumped last night in the middle of the night down to 9,500, and then bounced pretty hard back off of that, and it looks like our friends in Hong Kong might be attempting the good old fashioned bank run here. But yeah, man, how you been doing this week?
I'm doing good. It's just there's so much stuff going on. I mean, I don't mean to drag the Epstein thing in here, but there's the Epstein thing. There was the Philadelphia shooting yesterday with police officers. And then also the big thing, when I woke up Monday morning, I just opened my phone and everyone was talking about Argentina with their election shock and the Merval index down there, second largest single day drop for a stock market, 37.93% is what's showing here in mine, but I think it shows more on other things. Anyways, absolutely incredible. And not in a good way. But just, you don't see these things happen often. And the fact that, that something can go down 37% in one session is pretty crazy. That's a lot of people's wealth just vanishing in the thin air. And then also on top of that, the Argentine peso got crushed. I can find it. Yeah. That day it dropped I think it dropped over 20% at one point, 25%, but it rebounded back. But it's even lower than it was now. And this is Argentine peso to the dollar, so it's I don't even know, 0.01. So whatever. I'll do it with the USD ARS, which will show it in how many. Yeah, there we go. It's not good. It's definitely not. Shit is hitting the fan globally right now, and obviously most people don't pay attention to financial markets like we do, but it's one of those things where it's pretty interesting. Yeah, so 57 Argentine peso gets you $1 now. You can see it right here. It's pretty ridiculous. And it wasn't that long ago that it was beginning of 2018, it was 17 pesos to the dollar. I can keep scrolling back, and it's people's wealth in Argentina has just been wrecked.
Yeah, it's interesting. I was actually just in Argentina in October of 2018, and we were so excited because the dollar went so far while we were over there. The wine was cheap, the meat was cheap. You could go out to dinner, have a fully cooked ribeye, 16 ounces with a awesome bottle of Malbec for $10. It was just insane, but the dollar was, I want to say it was between 30 and 35 to 1 when I was there. And that wasn't that long ago. So now you're at 57.
Look at that. Yeah, there you go.
Yeah. 2 more months, that'll have been a year. That's not a lot of time. And I actually had screenshotted something that I was going to put on my story later today or tomorrow that was just showing, 100 pesos in 2013 got you $20. And now today, in August of 2019, that gets you $1.70, 100 pesos. So, you can see that the currency's just gotten absolutely wrecked, and that's kind of par for the course in Argentina. This is the currency's been repegged quite a few times, and it's really sad for the people who have lived there for so long and unfortunately have to keep going through this over and over again. And then someone like you and I, who would never the U.S. dollar's pretty much worked, even though it's been losing its purchasing power since 1913. Nobody really thinks too much about it and thinks that inflation is just expected and it's something that just magically happens, when that's not reality. And it's really funny because if you were living in Argentina in 2017 and you bought the top of the Bitcoin bubble at 19,000, you're up right now. And we have a chart here that you can see on the screen if you're watching on on YouTube, you're back at all-time highs already if you used your pesos um,
You're way
to buy
past it.
Bitcoin. I mean, like
You're like
you've
way
blown
past it.
past it.
Yeah.
So, and that's the thing where you can see how devalued the currency has been even just over the last 2 years. I mean, it's insane to think you could buy the top of the Bitcoin bubble in 2017 and that was still a better purchase than staying in cash. Like that's wild. That's wild. So I think local Bitcoin's volume has also gone up in both Argentina and Venezuela. And that makes perfect sense. I mean, you should be the Bitcoiners in Argentina or Venezuela will be looking to protect themselves and do whatever is necessary to get their hands on some Bitcoin. And I hope that that gets easier. I hope that there's a way for more people who are suffering from severe levels of inflation that they can go and get access to something like Bitcoin so they can protect their wealth. Because that just it's really a shame, and it's hard for if you are living in the Western world and haven't suffered from severe inflation yet. You really don't have a good appreciation for something that can store your wealth through time. Yeah, there we go. Yeah, I mean, local Bitcoin's volumes is skyrocketing. It looks like in Argentina, and that makes sense.
Try to find it. Oh no. I was just gonna pull up the yeah, there we go. So you can see local Bitcoin's volume. They're not perfectly correlated, but it's pretty close to correlation with the
Inflation.
inflation.
Yeah. Yeah, I mean, and that's, I think that's a good, that's one statistic, but I'll tell you, when I was there in October, I didn't see one Bitcoin sign, no logos, nobody talking about it. I didn't see any ATMs. I didn't see any of that. So the fact that local Bitcoin's volume is increasing and it's still relatively not within mainstream there is a good sign. I think I think that means it is ripe for, I guess, exploding as it becomes more mainstream, and hopefully the infrastructure that we see being laid out in 2019, 2020 will make a lot of this stuff
Yeah.
easier.
Look at this though. In 2013, the Argentine peso was like between 4 and 6 to the U.S. dollar. I mean, that's just incredible. So I mean, that's like, God, 'cause I've met some people from Argentina, but that was a couple years ago, and it's like, holy shit. It's like, what do you do to like preserve your wealth? Like, you gotta wonder, they're probably obviously wealthier because I met them outside the country, but you gotta think that hopefully their family or whatever had money in other assets, whether it was even U.S. dollars, other things that weren't, Argentina peso denominated, because yeah, those are wrecked. I mean, and you can see with like this chart here. I mean, I know it's not log scale. This is just linear, but you can see a lot of times with currencies, you'll see it a lot. Like the big moves just happen. Like there's a big move in early 2014, another big move, in the end of 2015, and then obviously it just started marching towards 2018. But still, the big moves just happen, and obviously this week it went incredible. So
No, I think that's a good point, and we just saw that with the yuan, right?
yeah,
It just exploded upwards, and it's hard to say. Like it's still really early in terms of these fiat currencies kind of losing their purchasing power very quickly and all of a sudden. In hindsight, it will look very obvious whatever ends up happening. But you always think about that the German mark chart where once it starts taking off, then all of a sudden, boom, you just have hyperinflation and the currency is just completely
it just
worthless.
keeps
Like
going.
it's like how that
Like
can happen faster than you think, and it typically does because hyperinflation is just completely unpredictable. All of a sudden, all faith is lost in the currency, and then poof, like it's just
yeah,
worthless.
and
And
the
yeah,
velocity of money just picks up incredibly because people want to preserve their value and get the hyperinflation situation. So people will buy anything. They'll go buy art. They'll go buy like in cases of Germany. Like I finished a book recently, When Money Dies by Adam Ferguson, people, it got to the point where people were buying bread, you're buying meat, you're buying anything you could get your hands on just so you could preserve your wealth over to the next day. Um, and it was the people that got affected the most were the people that lived in the city, the middle class, and but like when the farmers didn't get affected as bad because they still had their land, they were able to produce food like eggs, butchered meat, obviously, etc., and crops. But you know the cities got hit hard because there was a shortage of food because farmers wouldn't sell their food at bad prices, and it sounds terrible, but like hyperinflation again, economic stress drives people into just deep dark corners. That's when we see our worst as humans.
Yeah, and I think that's a kind of a good point to touch on the easy money that we've seen in the last 100 years is you can really tie that back as like the root cause of pretty much every single problem. I mean,
Yeah, all wars.
maybe that's a stretch, but it's really not because a lot of these things would never be prolonged or have gotten this bad or have gotten that far without like easy money policies and just fiat money in general.
Yeah,
The world would be a much different place if we were still on a gold standard or something like that. It just
exactly.
we wouldn't even be having this
They
conversation because
well,
markets would be rational and you wouldn't be able to like do insane lending and borrowing to fund really stupid ideas. We wouldn't be dealing with a lot of this nonsense. But that's what's exciting because once you spot that, you know that it can't last because it's like false, right? It's not real, and stuff like that doesn't last forever. So once that light bulb goes off, if you're even interested in this stuff because you got into Bitcoin and now you're starting to learn about money, you can easily identify, just walking down the street, well, that's a fucking dumb idea. Like every day when I go downtown and I see the dog sweater store. I
Jesus
probably talked about
Christ,
this before, and it's
easy
like,
money.
I walk in there and there's never anybody in there, for good reason. It's like a really high end like dog clothing store, which you know what? If maybe what do I know? Maybe they make a ton of money. I just don't see how, and that's the first thing to go when shit hits the fan or times are getting tough. Like
Times are tough.
yeah, so but it's things like that where if your borrowing costs are essentially zero, like yeah, you can take out a loan and open up a dog sweater store for 24 months and everything is fine and dandy until people don't have any money to go and spend there. And then you start to see which kind of businesses or business models are actually sustainable and realistic in a time when money is not easy, when you actually have to work for your money. Um, yeah, it's just absolutely fascinating. And now here we are in the middle of 2019, and it looks like we're teetering a bit with, equity markets are volatile. They're going all over the place. Bitcoin's volatile. Gold is volatile.
Yeah, gold,
Political
silver,
kind of
money.
right, like all of the, every recession warning sign is flashing red. They're waving the white flag. I
Wait,
mean,
yeah, and let's think. Wait, let's think about all the negative. There's over $16 trillion worth of negative yielding debt right now. That
yeah,
means that people are buying this debt with basically a promise to lose money, and then basically a majority of the world's yield curve is negative. It's
yep,
getting insane, is what is happening. And only when we look on this in hindsight in 5, 10 years, however long, will we be able to be like, wow, how stupid things got. Um,
yeah,
you know, like I mentioned before the podcast, at this point, central banks are doing whatever they can to prolong this, to prevent. They won't be able to prevent the crisis, but they're doing whatever they can to prolong it, like day by day, like literally day by day. It's insane.
no, I
Um,
agree with you. And go ahead.
no, that was gonna end with that.
It's tough because I know the show doesn't go on forever. It doesn't last forever, and it's almost like what's next in the toolbox. Do you have a situation similar to Japan where the Fed is buying stocks, and just keeping that pumped up in the event of a large double digit pullback in equities in the equities market. Does it happen before then, or does it happen after the fact? And I think that's something that I've been thinking about. And I was just listening to a podcast the other day, or this morning actually. Bitcoin Tina was thinking that, do stocks kind of stay flat for the next decade as the Fed does whatever it needs to do to prevent rioting in the streets? And that's like, I don't know. I know they're going to cut rates in September. That seems highly likely. Is it too late? Does the bottom kind of fall out then? Is easing happening right now in the background and we don't even know it? Is the plunge protection team kind of jumping in there already? Or will it be too late to kind of pump those bags to print and buy and prolong this, whatever it is? I like can't tell anymore.
Yeah.
Do they just prolong it? Because last December we were both like, okay, it's over. Here we go. Like, buckle up. And then we rallied again, and now here we are, and it smells exactly the same.
Yeah.
And this can be pushed longer than we think, and that's what makes it so difficult.
Yeah, I mean, I was listening to a pretty good. There's I think by Real Vision Finance or whatever on YouTube last night before to bed. And Raul Pal was talking about how the Fed, and you even hear Donald Trump talk about it, the Fed tightened way too quickly, and it took me a little bit, but then he talked through it, and I remember, because I've mentioned this to people before. People don't realize, like, interest rates over doubled in the span of, what was it, a year and a half, 2 years between 2016 to the end of 2018. Like, when we went from 25 basis points Fed fund rate to 225 basis points. And a lot of people, it doesn't seem like a lot, but that just over doubled, or even tripled the cost of money. Shit. Yeah, no, it's not even, it's even more than that, because 25 basis points. Yeah, no, it's an insane amount now that I think about it. It's like 10 times basically. They basically 10x the cost of money. And so you think about all the corporations taking on heavy amounts of debt, in 2013, 2014, 2012, 2014, and then the cost of this debt just skyrockets, 10 times. So let's say it was, $200,000 a year, now it becomes $2 million a year. So it's just, and you were talking about, on top of that, the Fed was doing quantitative tightening. So, and that's why, like, last year, we just fucking sank, like, from October to fucking December. And that's when they stopped QT. And then that's when the Fed just fucking completely pivoted. Because, like, there were that Fed chart where it shows, like, prediction for rates next year, which is completely worthless. Up until, like, October, November last year, everyone was looking towards, like, 2.5% to 3%, even higher at the time.
Yeah, I thought we were going to go higher, too.
Me too, for sure. I was thinking, we're going to go to 3%. But honestly, at this point, like, I think if Jerome Powell, he needs to big dick the rest of the world and be like, fuck off. We're going to not lower our rates to nothing.
Yeah. Yeah, I mean, I think he's still going to cut, but it's funny talking about that. When I was watching the Money Masters documentary, which is an awesome documentary. You mentioned that to me,
it's like, I completely forgot I watched it like last year when I was like handicapped. But I need to rewatch it. It's so good.
It's like a 3.5 hour documentary that basically goes over the entire history of just banking, central banking, the money changers, right? And they talk about how they realized you could cause these boom and bust cycles by restricting the money supply and then so tightening, right? And then easing the money supply. And you could, and now it seems like it's not 100 years later, but all of a sudden we have all of this information now at our fingertips, and people have been looking at this and seeing the trends over and over again. It's the same fucking thing. And you see the same thing with tightening of rates going up, restricting the money supply. There's less lending, there's less borrowing, and then the easing of that. And then you have all of these, worthless, you have malinvestment, and things are great because everything is just fine and dandy because it's easy back to easy money policies. So now in hindsight, if I think back to 2016 or 2017 as rates were coming back up, like I should have seen that coming, right? Like here's that next boom bust cycle. We're going to restrict the money supply, and then you'll get to the point where that we realize, okay, we're on the edge again. Everybody can unload who's in the know, and then you ease the money supply, and you kind of it becomes that is the business cycle. People talk about the business cycle and credit cycles and debt cycles, but they never really tie it back to interest rates, which I'm not really sure why, because everybody like, oh, the market's cyclical. Well, you haven't given me the reason why, and that is the reason why, in my opinion. You have that that tightening of the money supply, and then expanding and contracting the money supply. That's it. It's not even that complicated.
I was going to say one of the the craziest things about all this is like, now I'm blanking on it, but is when you look at like, I guess the market is simply like, since the delinkage of gold from money, I mean it just keeps going up, and that's why you always hear people talk about oh, stocks go up forever and this and that. But I think we are on the verge of a giant deflationary cycle, where stocks aren't going to go up forever. Prices of things will deflate, and because unless we go the hyperinflation route, which is much scarier.
Right. That's more rare. Right. So they were just talking about this morning on the podcast I was listening to. But it's like, I'm seeing inflation already just in the things that I purchase. Yeah. And but it's hard to say, does the dollar just become worthless in the next, I don't know, because it can happen just overnight. It's impossible to say, but you're right. There's a higher probability of to seeing the deflationary kind of recession. So what do you think would happen in that case?
Well, obviously, one, stock prices go down, but that means like, and this is the hard thing with deflationary cycle is, does that mean everything else goes? Does that mean gold gets wrecked? Does that mean oil gets wrecked? Does that mean silver, Bitcoin, everything gets wrecked, basically? Money going out. Now, I could be wrong. Maybe money piles into gold, silver, Bitcoin, other precious metals. But I think in general, with the deflation cycle, everything just, including real estate, real estate would be a prime example, just fucking losing value like crazy. And the scary side is the backside of whatever this giant run is we've had here since the 80s. I don't know what the backside of it is. It's obviously going to take years to play out. These are quarterly bars, so you're looking at 3 months equals each candlestick here. But it's just scary, and I think we still got a little more time before we really go down, barring some kind of really crazy black swan event. Like, did we mention the Hong Kong? We mentioned it earlier, but basically Hong Kong, it's probably happening right now, to be honest. One of their leaders, the Hong Kong activist, wants to, a run on Chinese banks tomorrow. And basically wants to run on all the banks so they can't lend to each other, which is pretty crazy, because if that happens, I don't know what that will do to financial markets. But Hong Kong is a global center for finance in the Eastern world, or in that hemisphere.
Right, and I think the bank run is interesting to talk about now, because I'm glad that the people of Hong Kong have even thought about that, because it's a brilliant move on their part if they can pull it off, and whether they do or not isn't really the issue, but more the fact that they thought about it.
Yeah.
And you start to realize, well, we can do that, and then all of a sudden all lending stops. If you force banks to close, all lending stops, all production stops, everything just kind of comes to a standstill. And I don't know, then what do you do after that? You start making demands. Like, everybody's kind of fucked in that case. But it's proof that the current financial system is a part of the issue, and it looks like they're going to try to at least pull the plug on this a little bit.
I need to find that clip of that British dude talking about banks. I think I sent it to you.
Yeah.
I'm gonna find it. I'll play that, because that's so good. This clip is phenomenal. It's from like 2014 or 15.
Yeah, it's a few years old, and it's funny because I had seen it.
I've seen it before.
prior to getting into Bitcoin, and then obviously once I was getting into Bitcoin in 2017, I'd seen it a few more times, and that was like the first light bulb moment of just everybody being completely baffled with how money is actually created in the current financial system and just poof out of thin air. And you just start to question everything at that point. And I give the guy a lot of fucking credit for saying it and really just nailing it. Yeah. I do forget exactly what his name was to help you search for it, but
I'll probably like retweet it at some point. I just like for whatever reason it's hard to go back to the private messages or whatever the messages.
Yeah,
for the DMs. I was gonna say also like this. I think I recently opened. Well, not think I did open a checking account recently, but it still boggles my mind that like 250,000 is the max you're guaranteed. Doesn't matter how many checkings you kind of have at a bank or savings or checkings. Like that's the max you're guaranteed.
Is that per person on a per person aggregate?
Yeah.
So
like,
it's
so if
not
I had
per
like a
account.
checkings and a savings account in my bank, I'm only guaranteed $250,000.
Mm-hmm.
Which then again, you think about it, it's like, well, if you're a wealthy person, you got to put your money somewhere else. Whether you hold cash in a safe, hold gold, obviously stocks, bonds, real estate. Just because like you're not guaranteed shit. I mean it really isn't that much money. I mean I know $250,000 is a lot, but it really isn't that much.
Right, and at the same time, if you were in a circumstance where the FDIC is giving you $250,000 back because the bank didn't have it anymore, chances are that the purchasing power of that $250,000 is going to be way fucking less by the time you actually get your hands on it. So as people like to throw that, oh well, the FDIC insurance, blah blah blah. If you're making a claim with FDIC, chances are you're fucked.
Chances are everything is fucked.
You know what I mean? It's just
no.
Like,
I gotta find this fucking video. It's somewhere. Good thing I like retweet everything I see because I'm a terrible person.
Yeah.
I'm gonna find it. It's so good.
All right. Well, while you're looking for that, I'll talk about kind of the Hong Kong bank run a little bit more.
Yeah.
I'm really interested to see if they actually get it done, because if they do and it causes kind of a standstill, the real question will be, will that become kind of the protest method of choice in other areas or countries? Would all of a sudden you'd see like, okay, well that worked, and now the protesters' demands are being met. They're not going to pass the extradition laws because the people of Hong Kong don't want to live under authoritarian rule anymore. They want to have access to firearms. They're holding up signs about the Second Amendment. They're waving American flags. They are really desperate for their freedom. And if it works in a positive way, does that mean other countries, or where there's does the yellow vest movement all of a sudden become, oh fuck it, let's do a bank run that's way easier than getting our asses beat by like Macron's army?
Yeah.
Like all of a sudden that becomes a way better strategy. And then to tie it all back into Bitcoin, something that you'll hear a lot of people tweet or say, like Bitcoin's a peaceful protest. You're just opting out. You're saying, I don't want to participate in this monetary system anymore. I don't want to, go to the airport and make it so that their commercial flights are just completely shut down. I don't want to do a bank run or all this other stuff. You're just going to voluntarily opt out of that system. And, just decrease the economic activity with that money. And I think it's fascinating that you could call Bitcoin a peaceful protest, because that's exactly what it is. You're just saying, I'm done with this system where I'm losing purchasing power constantly, year in and year out. Everything is costing me more and more, and you're not making any more money. Your wages are barely keeping up with inflation, if that. And job competition is getting stronger. It's it's really rare to find a job that's paying $250,000 and that can cover all your expenses. Like it's not fucking easy. I don't know. It makes it very interesting to see how all of this actually will play out, because everybody has different options depending upon where you are and how the country you're living in is performing economically. And it feels great to live in the United States at this point because it's things are not too bad, relatively speaking, compared to something like Venezuela, or having 20% of your net worth just poof overnight if you were living in Argentina. And if you were holding stocks, you got absolutely wrecked. So
you're holding stocks or the peso, you were wrecked.
Right. Like either way, you probably took somewhat of a haircut.
I think I found the video also. If it ever loads. Took me a freaking minute to find that. Yes, here it is. European Parliament.
Mr. Bloom has 2 minutes.
So the guy's name is Godfrey Bloom, British politician, but I digress.
Commissioner, Mr. President, I rise again, I'm afraid, to make the same old hoary speech that I've been making here for several years, and that is, it is my opinion that you do not really understand the concept of banking. All the banks are broke. Bank Santander, Deutsche Bank, Royal Bank of Scotland, they're all broke. And why are they broke? It isn't an act of God. It isn't some sort of tsunami. They're broke because we have a system called fractional reserve banking, which means that banks can lend money that they don't actually have. It's a criminal scandal, and it's been going on for too long. To add to that problem, you have moral hazard, a very significant moral hazard from the political sphere. And most of the problem starts in politics and central banks, which are part of the same political system. We have counterfeiting, sometimes called quantitative easing, but counterfeiting by any other name. The artificial printing of money, which if any ordinary person did, they'd go to prison for a very long time. And yet governments and central banks do it all the time. Central banks repress the amount of interest that rates are, so we don't have the real cost of money. And yet we blame the real retail banks for manipulating LIBOR. The sheer effrontery of this is quite astonishing. It's central banks that manipulate interest rates, Commissioner. And plus, underneath all this, we talk loosely, in a rather cavalier fashion, do we not, about deposit guarantees. So when banks go broke through their own incompetence and chicanery, the taxpayer picks up the tab. It's theft from the taxpayer. And until we start sending bankers, and I include central bankers and politicians, to prison for this outrage, it will continue.
Yeah, it's a really good speech, and I hope whoever listened to this got to hear that. I know this is towards the end of our podcast, and that's probably a pretty good way to wrap it up there. But the reality is all banks, especially when you look at the European banks, it's a shit show. Like, I'm just going to pull up BBVA. They're on the verge of collapse. I mean, there's no way around it. You just look, I mean, the markets are screaming that they're done. Like, this just broke its last trend line here and is probably heading down to pennies. And that will happen in the coming months. And it's just going to get worse. Like, stocks are something, as stocks go down more, they get shorted more heavily. It's one of those things, more people jump on that bandwagon. And, it's the same thing. Like, I don't know how it works with Europe, but in the U.S., like today when GE fell over 10%, they like banned short selling. It's just fucking stupid.
Yeah, I mean, I understand why they do it, but at the same time, you're just getting rid of all price discovery right there, because it would just continue to get absolutely hammered.
Yeah, and did we mention GE at all?
No, we didn't. You should talk about it.
Well, I'm just going to mention it briefly. Basically, GE is a giant shitcoin. It has been for a while. They've taken on loads and loads of debt, and now the guy who called out Bernie Madoff, I can't think of his name, called out Bernie Madoff's Ponzi scheme, basically is saying GE is hiding a bunch of bad debt, in other accounts. and the stock dumped 12. Well, it closed at 9.5% down, but it was down over 12% during the intraday. GE is a giant shitcoin. The sad thing about GE is there's obviously a lot of Americans. There's probably other people from other countries, but specifically Americans that are, through the pension are funded, and they're going to get wrecked when this company goes to zero. I'm not saying that GE has a bunch of good assets, and those will get sold off separately to pay for their issues when they go under, but it's going to happen. And the sad thing is, in 2016, instead of fucking investing in their company and shit, all they did was fucking buy back shares at $30 a share, and now those shares are down 75%. So here again, that's why buying back shares should be illegal. I mean, it's just absolutely insane.
Yeah, I mean, it is unbelievable that that's happening. And when I was trying to read up a little bit more on, the guy who's kind of calling out GE, I think he put out like a 175-page report on the whole thing. It was pretty impressive. When I think he called out Madoff, Enron also.
Yeah.
And it was, within 4 or 5 months, they were pretty much insolvent by the time he had kind of, waved the white flag, or waved the red flag, I guess you could say in this case.
I found the guy's name. It's Henry Markopolos. It says there's a few smoking guns on GE. Yeah, 170-page report.
Yeah, I mean, that's wild. And, the sad part is that as, firms become insolvent.
Look at this, dude. This is a legit page. Look at this.
Yeah.
GE is the next Enron. The Genron playbook. GE is playing decades-long accounting fraud by only providing top-line revenue and bottom-line profits for its business units and getting away with leaving out cost of goods sold, SG&A, R&D, and corporate overhead allocations. Discovering GE fraud. Jesus.
This will be interesting to watch historically.
Yeah, this is
looking back on this will be.
Well, look at this. The
New
CEO.
Crest gum insensitivity wraps your teeth in sensitivity protection against everything from cold foods.
He bought like 2 million shares or something.
He bought $2 million worth of shares, at the end of the day, which is pretty interesting. How am I going to save my stock? Let's go buy $2 million. I mean, that's a lot of shares to buy. I don't know what the volume was today, but that's a lot of shares. Volume is probably obviously pretty high considering its price dump.
Oh yeah, for sure. Well, it'll be interesting to see actually how it responds tomorrow.
Yeah.
End of the week, Friday. If you're working at GE right now and you have shares, what are you doing tomorrow? We're going to find out because people are not going to be happy.
$38 billion worth is what they're saying. Only GE's accountants know where the skeletons are buried. We dug up several $38 billion worth. So it's going to fuck up all their debt ratios. It's going to make what little free cash they have, from what I've been reading, just non-existent. And they're saying there are a lot more cockroaches. And said it could soon file for bankruptcy. I mean, think about that. GE is fucking huge.
Yeah,
it was huge. It was the highest valued stock in 2000.
That's crazy.
I know. Well, you think it's a good way to wrap her up here?
Yeah, definitely.
I mean, we'll definitely be able to. We're going to cover this stock on its way to zero, so this will be fun. Thank you for listening. I hope whoever stayed got to hear that British politician said, because that's the reality of our banking system, and don't think twice that it won't happen again. What happened in 2008, 2009, and then also in Europe, what happened in 2011. There's debt crisis in 2012. It will happen. So just be careful. Try to protect yourself. Read and pay attention to what's actually going on in the world.
Definitely. All right. Peace.
Peace.